In the new year, the federal government unveiled plans to establish the National Credit Guarantee Company, NCGC, by the end of the second quarter of the year. This groundbreaking initiative is to revolutionize access to credit for individuals and key sectors of the economy. To speak on how this initiative will serve as a key driver of sustainable economic growth and development is the Registrar, National Institute of Credit Administration, Professor Chris Onalo. He joins us virtually from Lagos. You're welcome to Business Express, Prof.
Thank you very much. Good to hear you, and thank you for having me.
And Happy New Year, Prof. I think I'm seeing you for the first time in 2025.
That's right. Happy New Year to you too.
Okay, well, let's get to understand this National Credit Guarantee Company.
Well, thank you very much. It's perfectly aligned with the goal, the objective, and the mandate of the Institute, given the fact that this is a statutory body established by law through the Act of Parliament, number 26 of 2022. And our mandate, essentially, among other things, is to support the government, is to encourage the government and to assist the government in whichever way we can to make sure that the issue of credit management in this country is professionally governed and well distributed. And in the current circumstances, we were quite elated that the current government is taking a bold step to transitioning the economy from the dominant cash and carry, which has lived with us for a very long time, to credit system. And I must say that in any economy, it is micro, small, and medium enterprises that really drive the economy. Yes, it's a good thing to have multinationals. It's a good thing to have blue chip companies and so on and so forth. But the wider majority of business owners, enterprises are the indigenous. And it is the indigenous that rise up to conglomerate to blue chip and even becoming multinationals when they are now able to set up branches in other African countries.
I was saying that with the challenge, is it the challenge of accessing credit that is affecting most small and medium scale business, or is it just the interest rate, the high interest rate at this point?
Well, it's basically and largely the challenge of creating avenue for economic growth, for prosperity by the small and medium scale enterprises in the country. It's not a matter of the interest rate. Interest rate does not come into affecting businesses without several factors. But the first thing first, and that is the government is bringing in a very conducive business operating environment through access to credit by the small and medium scale enterprises. Over the years, this economic the economic component of our larger economy has been largely neglected, and then banks do not want to lend money to them because they don't have collateral to support that loan. Now, that has to be fixed. That is a major problem which has to be fixed first and foremost before we go into the issue of interest rate on money that is borrowed. And if a larger percentage of banks are now happy to lend to the SME, you'll agree with me that industrialization roadmap becomes much clear. And then because of the high competitiveness in lending to a wider audience, which in this case is smaller and medium scale enterprises, then the issue of interest rate will obviously come down because there's competitiveness in the lending. But as I said before, the small and medium scale enterprises in this country has long not been able to access credit, having access to finance, to be able to expand their businesses, grow their businesses, to start up new businesses, which is the main focus, economic policy focus of any government. And I think that is what the President Bola Ahmed Tinubu has realized, that developed economies are the way they are because they took bold steps, just as what the president is doing right now, which I consider that this is the biggest economic policy legacy that any government in Nigeria has ever, left behind. If this initiative is fully implemented, which I think, of course, with all the critical stakeholders coming into it, it will be implemented fully, and the Nigerian economy will become the bride of both the people, Nigerian themselves, as well
Okay,
as international
Prof,
community.
Prof, do you see this particular initiative closing financial inclusion gap in the country?
Absolutely, that is what it is. Not only the financial inclusion, but it's much more economic inclusion. I think the whole goal is about economic inclusion, so that people can in turn get involved in financial activities, define first and foremost what the business climate you are putting in place for people that are in business. And then after that, then they can now talk about what policy that will bring them into in financial basket of the country. And in this case, where the government is starting with, first of all, you should have access to funds to develop your business, to bring out the best in you. Nigerians are genius people. Bring out the best in you, create jobs, and the government, of course, will take taxes on all of those opportunities that have been created. So it's largely about economic inclusion in the first instance, as opposed to financial inclusion.
Okay, yeah, I believe you must have known about this particular initiative. I mean, you must have gone deep into this particular initiative. How are banks encouraged? Are they incentivized in one way or the other so that to encourage them to actually lend to small and medium scale enterprises?
Well, the banks are as joyous, as happy as we are at the National Institute of Credit Administration because it's opening the fiesta of lending markets to all the banks. The limitations that the banks has before on account of small and medium scale enterprises cannot provide the collateral security to back up the loan, that is going to be totally eliminated. And then banks will now be focusing on very strong packaging of credit portfolio, getting the right frame of policies that will effectively manage the exposure to this level of borrowers. And don't forget that the essence of the credit guarantee company is that the collateral, the security that this level of borrowers don't have over time, they will now be backed by the certificate of trustworthiness, of creditworthiness that will be issued to them by the credit guarantee company. So that take the place of the land they don't have, the building they don't have, or whatever form of collateral the bank wants with them, want from them. But it again, with the guarantee company, the management issues, accounting, record keeping issues, and succession plans and all that. All of that will be developed by the credit guarantee company and getting all the borrowers involved in that net. And of course, this now gradually leads to the issue of interest rate reduction because a large chunk of risk would have been shared between the credit guarantee company and the lenders, the bank themselves. So it is a win-win situation. It's going to get the banks to be more competitive, and then the banks will look at the larger market for the SMEs, and no bank would like to be excluded from the process. If you have a lax credit system, that's on the part of the lenders, of course, the credit guarantee will say, look, you got to go back and strengthen your credit administration procedure, and then so that we can get people your customers who are looking to borrow money from you will be very much happy to issue them certificate of guarantee, and then you can advance the credit line to them. So it's a win-win situation for the banks. The banks will be the happiest, and then the SME will be the happiest, and then of course the government will be very happy for that. And as a professional body for credit management in the country, of course, our role is sine qua non.
Okay. Now, I believe you must have seen the federal government's assumption for key assumptions for 2025 budget, and one of it is that the hope that inflation would decline to 15%. I don't know, but when you do the mathematics, I don't know. I believe that's the reason why we have the inflation. Inflation is very high at this point. That's why we have high interest rate. By the time it declines to 15%, what do you think will happen? I mean, in 2025, how do you see this playing out?
Well, the quicker the government to release enabling funds to back up this credit guarantee scheme, the better, because it's going to critically fight down the inflation rate in the country. Uh, Hope comes first. And I think this government, to be very honest, I'm not a government man. This government is very smart, very, very smart indeed, because that is the key. As soon as the government comes up very fast, very quickly to put structures together to float this, you could see the enthusiasm that comes with it will naturally impact on the high inflation rate we have in the country. And of course, it will be a jittering mechanism that you are putting into the market. The market will become unsettled because the interest rate will come down, the lending market will be expanded, and then the dream for industrialization is very close, knocking on the door for the country. And then, of course, the various factors that add up to high interest rate and inflation will begin to calm itself down. That's why I said the government, this is a very smart government I've ever seen. And I hope that the courage, the political will and the deployment of resources to actualize this is put in place so that we can talk less about inflation and then talk less about the high interest rates on lending.
Okay, Professor Chris Onalo, it's a pleasure having you on the program.
Thank you very much for having me. Thank you.